We've had that dreadful unemployment figure coming up last week, so we thought maybe we'd get more information on the impetus of this plan. But I want to get more analysis now from Momentum economist Sanisha Pacikisamy, who's been listening in on that delivery by the President this morning. Sanisha, thanks indeed for talking to us. So, I mean, we've seen the President talk about the recovery plan in that question and answer session. I would imagine, just given those dreadful unemployment figures we saw last week, there was growing anticipation to see whether or not he'll put anything new or any meat onto the development in this plan. But we've simply just had a reflection of some of the achievements we've seen over the past month. Have I got that right?
Hi, Devin. Indeed. And I think it's quite disappointing. You know, this year we did commemorate the 45th anniversary of the Soweto uprising, on Youth Day. And we are now still sitting with a youth unemployment rate that is north of 45%. So that basically means that 1 in every 2 of the youth, which Stats SA categorizes as between 15 and 34 years of age, is without a job.
He did, however, try to sort of answer those questions around specifically the youth unemployment. I mean, there was this question that he brought up saying the youth tax incentive has shown to have worked out, so perhaps give more traction to that. Again, nothing new, but perhaps trying to answer and saying, well, there are things that worked with regards to tackling to some extent the issue, and the youth tax incentive was one of them.
We definitely do have to celebrate some of the small accomplishments and wins along the way. But unfortunately, in South Africa's case, sitting with our very elevated rates of unemployment, I think more needs to be done. And we do need to see the private sector and public sector coming together in order to rectify our very high levels of unemployment, which are a huge burden on the economy and on the fiscus.
Sanisha, I just want to go through some of those reflective points very quickly on that recovery plan. One, he said that, look, one of the biggest achievements was the fact that we've now got it gazetted in law that private users of electricity can generate 100 megawatts of power, self-generation. He spoke about the ports where private investors are being, can embark on a bidding process to increase activity and efficiency there. He also spoke about 1 or 2 other sort of interventions that could lead to better economic activity. But again, you just didn't see any more meat coming into that blueprint that he has. And the important thing here is that investors probably wanted to see something, because our fixed investment rate to GDP is not something to be smiling at. It's quite bad.
Indeed, our fixed investment to GDP ratio, in fact, is a little bit lower after the GDP rebasing exercise that Statistics South Africa carried out not too long ago. And of course, to accelerate trend growth in South Africa, fixed investment is key in order to push up economic growth in future years. Now, I did say that, we had some small wins on the employment announcement. I think we have some bigger wins with some of the network industries. So the embedded generation announcement and the announcement about trying to pull in the private sector to investing in our port capacity, these have huge potential over the medium to longer term to really ramp up the logistics that we have in South Africa and our capacity in order to generate much higher levels of economic growth. Already there are some estimates out there that suggest, on the energy side at least, we could get another 15 gigawatts of energy coming on stream within the medium term. Of course, a lot of these projects are longer term in nature, so we do also need to be a little bit patient.
Just very quickly, I am going to chat to you on Tuesday when those GDP, those all-important growth figures come out. But any expectation from your side as to whether or not that would be something to look at with any positivity come Tuesday?
I think it's also quite interesting to look at which of the sectors may outperform and which are likely to underperform. Remember, we were coming out of the second wave at that stage, so some of the services components, such as your transportation sectors, etc., those might actually do a little bit better off quite a weak base. We know that agricultural sector seems to be pumping along quite nicely. Unfortunately, we think that manufacturing might be a bit of a disappointment. As well as construction might still be disappointing given the very poor rates of investment by both the private and the public sector. We do know that the first quarter yielded quite a good growth outcome for South Africa, off again a very low base. So we are likely to see growth slowing into the second quarter. Looking forward, of course, we have the third quarter GDP number, which will only be out in another couple of weeks' time. But we do know that the looting, the unrest, and the further restrictions that were put up with wave 3 coming through into South Africa on COVID-19, we will likely see a negative print on the third quarter GDP number. So before getting a bit too more optimistic on the second quarter number, we might still hit another hurdle when we get through to the third quarter GDP number for the year.
All right, so those growth figures out on Tuesday. Sanisha Pacikisamy from Momentum, thanks indeed for talking to us.